but not every one of these is going to fit your trading style, right? Some of these have downtrend indicators. Some of these have neutral indicators. Some of them have green indicators, but they're less than 1 million average daily volume. But you know what? Find what works for you. Good afternoon, traders. How are y'all doing today? Hope you're having a fantastic Thursday. Hope your week has been going just amazing. I'll tell you what, trading has been pretty awesome this week, and that is what it's supposed to be like with OVTLYR. Good afternoon, everyone. Just reading The Complete Turtle Trader. Very good, Peter. That is, if it's not my all-time #1 favorite trading book, it could be my second. In fact, let me grab my favorites off the shelf. By the way, you're about to see behind the curtain, right? You're about to see like the Wizard of Oz over here. As the green screen goes down, oh my goodness. I have probably 1,000 books over here. In fact, I'll tell you what I'll do. So I work from home in what we call the library, and I recently redid it. Let me move it around a little bit. So I got Scrooge McDuck over there. Scrooge McDuck is my spirit animal, so I actually have two big portraits of him in here. Everything is blue. I very recently did it. So yeah, I got probably 1,000 books on the shelves here. Put that back where it goes. All right. And this is my trading shelf. But there are a few that are out of place because I used them not long ago. All right, so yes, Complete Turtle Trader. You need to pick this up. You need to get this one for sure. This one's really good. It's not the way I trade exactly, but this has been one of those like you have to keep it around forever kind. How to make money in stocks. Larry Heights, The Rule. Worked with Larry, one of the original market wizards. This is really good. Pitbull, another market wizard. Marty Schwartz. I didn't work with Marty, but still a good book. I have some that I've read that I would never ever recommend ever. Like this one here. A lot of people were really into this. So I met Jared Tindler, the author of this, The Mental Game of Trading, and I wasn't super impressed by it. Like it was really dense, really hard to read, and I just wasn't my thing. This one is one of my all-time favorites. More Money Than God. Absolutely, totally worth your time to read. It's very similar to Market Wizards. In fact, where's my Market Wizards book? I think I take that back. I actually have 2 trading book shelves. It continues on that way, which is what I was thinking that some of these were missing. This talks a lot about the Market Wizards in a different fashion, but incredibly well written. So yeah, this is one I would totally recommend picking up. So some overhyped books. Mark's gonna kill me. So Mark, the jacket for the other one's over there. But Mark's 2 books, Think and Trade Like a Champion and Trade Like a Stock Market Wizard, are both very good. But they are a lot of like this one. Very, very similar. So if you read How to Make Money in Stocks, you've pretty much read Mark's book. And you don't need to read both of them, honestly. This one is incredible. The Man Who Solved the Market by Greg Zuckerman. I believe they're going to rewrite this in the near future for Mark Gariski, because that is definitely the smartest guy in the room. So be on the lookout for the second version of this. I did get a chance to interview Greg Zuckerman as well. Really cool guy, works for the Wall Street Journal. Very good book. That one's actually excellent on Audible. I mean, I'm telling you, you could listen to that one I have listened to that one multiple times on Audible because it just reads like a story. But #1 all-time favorite trading book is Trend Following. Now, there are multiple versions of Trend Following, okay? I have multiple versions. This is the one you want to get. This is the one that is, in my opinion, the easiest to read and most useful. And if you go into the book, you'll see a lot of correlation for what I do as to what Michael Covell talks about in this book here. So this is the 2004 version. I'll show this again. So this is a 2004 version of Trend Following. You can see that I spent literally less than $10, and this is worth hundreds of thousands of dollars to me at this point. And then this one, same book, newer version, much harder to read, incredibly difficult to read, which is weird because it's like a newer version of that book. In fact, let's do it. publishing year this one was. 2017, right? So given if you had one trading book ever, I would go with Trend Following, the 2004 version, not the 2017 version. I don't know how easy it is to find the 2004 version, because most people like me, once they found out that they had different versions, realized just how good the 2004 version was. As far as what is the word I'm thinking of? Trading psychology, trading in the zone is worth every penny. I will recommend this until the day I die. In fact, you can see just how many tabs that I've got in this book. I have a pink thing that's or green thing that's messing up the green screen, but I have like 400 tabs in this book, all in trading psychology. Hang on. There's also this incredible book by a certain guy. This is the first edition. Hey, look at that. I know that guy. But I mean, honestly, like my books don't compare to the others. But I'm looking for one in particular. Once I find it, there it is. It was on the wrong shelf. New Trader, Rich Trader. This one by my friend Steve Burns. So Steve was one of the people who like really taught me how to trade the most. The best story I can give you was I remember working with Steve one day, and I said, Steve, he said, you know, you look at the trend, and the trend will tell you which direction it's going. And I was like, Steve, how do I even know what the trend is? And he's like, yeah, trend lines to your chart, Chris. Like a 10 period moving average. If it's above the 10, then it's trending higher. And I was like, oh, okay, cool. Like I felt so stupid. But this is a really, really, really incredible one. My 10, 20, 50 came from specifically this book. And it's so easy to read. So easy to read. Definitely worth the time picking up on Audible as well. So those are the ones I would recommend. I mean, I have, like I say, I have hundreds and hundreds of books in here. Some are not all that great. Like Trade Your Way to Financial Freedom. I'd skip it. The two Peter Lynch books, One Up on Wall Street and Beating the Street. This is great if you're like a long-term investor, a fundamental investor, something like that. But the way that I trade, very not applicable. And there's probably going to be a lot of hate for how much I don't enjoy these books, but it's just not the way I trade. So anyway, enough of that. Well, oh, look at that. We're back in the global headquarters of OVTLYR. So I hope you guys pick up some of those books. I have spent tens of thousands of dollars filling this library with really good books. And this one, worth every penny that you can get. And let that be the gateway drug to get you started. Now, let me get back to it. Good afternoon. I was just reading the summary of that 2 days ago. Dave, trying not to read it in one day. Totally get that. Leo's here. Good afternoon, Randy. Donna, good to see you again. Hey, Cam, glad you made it. Jean-Louis here. Michael's here. Michael's also here. Yeah, buddy. Loving the big library. Very cool. Very cool. I appreciate that. Sebastian. Mark says, Chris's library is full of rich mahogany. He has many leather-bound books. If only I were an anchor man. Yeah, I love that book too. It's so good. Is it just connection that it's really bad? I don't know. Does anybody else having issues? For a math nerd, audio is really bad. Better now. Restart YouTube. Okay, cool. Glad y'all were able to make that work. And I apologize for going off script. But you know what? I'm here to help you out, right? I look at this as my opportunity to basically give you one-to-many coaching every single day on how to trade. So those are some resources. Those are some textbooks you need to pick up. Now, let's jump into our market analysis. So clicking. Clicky, clicky, clicky. Welcome to the OVTLYR Trading Room. This is smart trading made simple. Save time, make money, start winning with less risk. Now that is what I like to call profit hacking. And you can get a copy of the playbook over at profithackingplaybook.com or inside the Discord in the VIP Investors Toolkit. And for those of you who don't know me, my name is Christopher Uhl. I've twice been awarded Top 100 People in Finance. That was weird. All right, are we good now? Twice been awarded Top 100 People in Finance. I've been successfully trading since 2009. I am a partner with OVTLYR, and this is my style of trading using the OVTLYR data. Now, I call this the golden ticket trading strategy. It's the 8 steps to turn profit hacking into pure gold. Hey, do me a favor. While you're watching this, make sure you're subscribed. And it starts with the master key. It unlocks the golden ticket trading strategy. Mark says, we need to add some Thaler, Dan Crosby. Housel's book is a great read, although it comes off as a little defeatist. Dude, I got lots of like non-trading books. Those sound like non-trading books. I can't read fiction anymore in my life. Honestly, I read so much nonfiction that it's very difficult for me to sit and read a story. Because I would much rather hear a true story that is really well written, like More Money Than God. Oh my gosh, love that one. The Man Who Solved the Market. Oh man, yeah, those are or Flash Boys. That's a great one. All kinds of great books that are true stories. That it's just difficult to even read fiction anymore. So much good stuff. Now the master key starts with these things: the SPY S&P 500, buy or sell signal, the market breadth, and then the individual sector breadth. So let's go look real quick inside of OVTLYR, and we'll see here the SPY continues to have a buy signal. SPY's pulling back pretty hard today, but it ain't that bad at all. It ain't that bad at all with the trades we have on right now, and that's okay. That's part of it, right? The market breadth. We had 63 new stocks on the bull list today versus 9 on the bear list. So looking at the market breadth, we can see market breadth continues to climb higher. And that's what we want to see is it's not just a checkbox. This is the number of stocks moving higher, the number of stocks on the bull list moving higher, which is pushing everything up. That's exactly what you say you have here. Randy says, I have no time for fiction. You know what? That's kind of my attitude too. Not exactly completely that, but yeah. And plus, I do the marketing for OVTLYR, so I'm like constantly reading marketing books all day, every day. That's also my jam. So market breadth is looking great. Now I went through all of these sectors, and the only sector that's not bullish at this point is utilities. So all the sectors are bullish except utilities. So I won't be taking any utility stocks today. So the market right here, we need to see the 10 over the 20, price over the 50 on the S&P 500. And we're going to pull this over here and go to the S&P 500. We can see the 10 is over the 20, price is over the 50. So that is still a bullish trend. RB, hey, this is the first time I can remember seeing you here. Are you using the 5 moving average for market breadth? I personally like the 10 on the market breadth. And whenever we built this, they did ask me specifically, hey, Chris, what do you want to see? And I said, let's give people options. Let's give them the 5, the 10, the 20, and the 50. Now, I like the 10 because that is, in fact, the 10 is the indicator of a short-term trend. This is a cheat sheet. You should screenshot this. An indicator of the short-term trend. If price is above, if the bull list is above, if the market trend is above, if the breadth is above, that is the short-term trend, right? Now, a 5-period moving average is strong momentum, but I personally like the 10, and you get a lot less volatility with the signal by having the 10 versus the 5, right? And then even less if you do like the 50, right? So personally, I go with the 10. RB says, are the sectors you're looking at to determine if they are bullish or just looking at the 10, 20, 50? Are you looking at the overlays or the arrows? Very good question. Very detailed question. In this case, the market breadth that I'm looking for, I'm applying the same context for full stocks as I am for financials, for example. So we'll go over to financials. And here, this is the breadth of the financials pushing higher. Now, the 10, 20, 50, I still use that on the individual stocks that I'm looking for. And we will be covering that more in just a moment. Great questions. So let's go back over to here. So 10, 20, 50 is bullish. We saw that. The market breadth is bullish. We saw that. So we're looking good to continue on. Now, before we do anything, we need to reduce risk. Before we add any new trades, we need to look to reduce risk. Now, yesterday, we tried to roll Walmart. We were unsuccessful because of liquidity. Let's take another look at Walmart today. I know it was up earlier on in the day. We might be able to roll it now. Let's take a look. I'm going to start with Walmart, and then we'll work our way down. So I do want to roll Walmart. We were in the 70s, September 20th, 70s. So we'd be selling to close the 70, buying to open. Now, liquidity, right? The only one with liquidity is the 73 and a third, and I don't know why it's 73 and a third. Here. So it looks like $3 would be the midpoint. Super liquid, 17, 18,000 versus an 11,000. But 80 cents over 305 is how much? 26%. It was like 33% or something yesterday, wasn't it? Maybe it was closer to 35%. Earlier on today, it was a lot better while it was way up here, almost to the second ATR. I'm not quite ready to roll it yet. I mean, 26% is fine, but it's trending higher. And if it'll make it work, then I'm up for it. But right now, I'm 50-50. We could go either way. We could roll it, take the 26% on there. Yeah, let's do it. Let's do it. Now, kind of steamrolled into this. Let's talk about this real quick. For each profitable ATR that it moves up, this is what I like to do. So we got in at 73.61. Now it's up at 75.57. And the one ATR point, one ATR higher was at basically $75. So it's 50 cents over that point. And so we can roll this. And when we do, it allows us to take partial profits now, frees up capital, and keeps the trade alive. So the way that you do it is you roll up from the one that you're in closer to the money. Now, it can be one strike. It can be two. It can be three. The strikes on Walmart are super weird for this, whatever the case is. But we're looking to roll to the one with liquidity. As one order, sell to close the original position, buy to open closer to the money, same number of contracts. So I'm going to go ahead and do that. If I can get filled, if I can get filled at $3, I'm good for that. I'll just leave it at $3. So I'm closing the 70s, opening the 73 and a thirds. I'm putting the order in at $3, and it's working. It's a 297. I can let, you know what? Here's what I'm gonna do. I'll let that sit. If I can get that filled, then no issues there. I got a call coming in on the other line if you can hear that. So we are good to go in that. In Walmart, I'm gonna let that sit at 70. No, not at 70, at $3 on that order to roll. I don't know where it'll get filled, but I'm gonna let it sit. Let's go to the next one. Halo. So Halo here. Let's go through this list. Oh, you know what I do need to do real quick? Let's look at Walmart's heat map. Make sure it hasn't stalled. Because that is one of my exit criterias, which I forgot to look at. It's not anything like this. I just need to check that the heat map hasn't stalled. So yesterday was G18, today is G22. Nope, good there. And my exit point on Walmart was G23. So we could roll it. It's potentially going to be coming off tomorrow no matter what. Am I filled? Not yet. So yeah, Walmart's coming off tomorrow no matter what. And the reason I say that is if the heat map stalls tomorrow, I'm out. If the heat map goes up from 22 to anything else, I'm also out. So Walmart's coming off tomorrow. So I'm going to go ahead and cancel that order because I'm planning to take Walmart off tomorrow. There's no real benefit here to do that. Okay. So Walmart's going to stay on, definitely come off tomorrow. Let's go to Halo. Halo got in at 61.67. It's a couple of pennies over that. And so no issues there. It's not below the half ATR. It's not below the 10 EMA. So 10 EMA, half ATR. There's no order blocks in our way right now. And the heat map, Halo. Yesterday was G13. Today is G16. So it's continuing higher. And I said I'd get out at G18. So potentially out of Halo tomorrow as well. Let's go to XLF. Not below the 10 EMA. Not below the half ATR. No order blocks in our way. So let's go to XLF. While that loads, RB asks another question. QQ, are you still looking at closing the trade if the price drops below the prior day close? Good question. Only if it's profitable. Only if, in fact, let's go to Walmart real quick. Like this, as it's doing awesome like this, no, I have no issue to close unless it closes below the prior day's low, like down here. Okay. Like if it closed somewhere down here, below yesterday's low, and it's already profitable, yeah, I'm going to go ahead and get out. But something like Halo, right? I'm letting this be my one stop out point. Now, I have been stopped out many times where it never even crossed a half ATR. I was just really, really tight on my entry point here, and then it took off without me. So that's where I was like, you know what? I set my risk to be at half ATR. I'm going to let the risk be at half ATR. So no, I will only close it below the prior day's low once I'm already profitable. And Walmart's a perfect example of where approximately that would be. All right, let's go to XLF. All right, yesterday was G8. Today is G10. So XLF. G17 is where I said I get out. So no issues there. Moving on to the next one. FI. So this is not quite to 1 ATR. It's not below the half ATR or the 10 EMA. So no issues on that. No order blocks ahead. Let's go to look at this. And we can see here G33 yesterday, G34 today, G32, 3, 4. My exit point on that is G37. So no issues on FI. Let's go to CIEN. Again, you know, it's slightly above board here. Not under the 10, not under the half ATR, no order blocks in the way. CIEN. We went from G18, G20, G23. My exit point's G28. So no issues. Good. Cam, as your book will cover how to set these ATRs. Cam, I believe I do have a section on ATRs in there. If not, the Turtle Trader totally does. But here, I got you. Watch this. So easy. This is a setting that you can add onto pretty much any platform. It's called ATR. And it's the average true range. Now, average true range is the value of how much the stock moves, you know, over time. So in this case, it's 14 periods. You can change it to 20. You can change it to 300. Doesn't matter. It's the average range over X number of periods. You can see when it gaps up on like that, you can see how the average range goes from 1.6 to 1.8. Okay. Now, the way that I do this is I manually, in fact, you can go to the last couple of days and you can see how I do it. I manually calculate that. So if the current price was at, or the current ATR is at 1.63 in the bottom left-hand corner, then I just take 1.63 divided by 2 is 81.5 cents down is where my my ATR, half ATR would be. And then you take the 1.63, and then you add that to the original entry point to get to the new ATR values. And that's where we do those, the rolling points. Okay. Those are offensive / defensive moves. They're very, very strategic moves there. So CIEN, we already talked about the heat map is at G23. So I got G28, no issues there. Let's go to XLB. That's the last one we have on. And XLB's down slightly, not below the half ATR, not below the 10 EMA right there. No order blocks out here in our way. And then selling to strength at G13. You're welcome, dude. Like I say, this is like a coaching call every single day for you guys. So we start at R0. Today is at R or G1. So it went from the R's, from the fear, up into G, which is the greed. Okay. So pretty cool, right? So my rule is that anything starting in the R's gets out at G13. I back tested this. That just seemed to be a really solid exit point there. So G13 is where I'd get out there. So I don't have anything to take off right now. At Walmart, we're not going to roll because we are going to get out of it tomorrow. No real sense in doing that, honestly. Well, that's done. Let's move on to the next step, which is looking for new trades. Now, we're going to run the stock scanner inside of OVTLYR, which is one of the coolest new things that we've got with a positive backtest, 1 million shares average daily volume. The buy signal, the oscillator moving up. The oscillator is this blue line. Zoom out. That is not a moving average. That is the price trajectory oscillator. That is potentially one of the most, if not the most, important indicators inside of OVTLYR because that's the prediction of where the trend is going. So I want to see that moving up clearly. All the market caps, I don't care what size it is, as long as it's over $20. The heat map, I want to have any R value or any G value up to G40. And then I want to have the green uptrend overlay right here. So that is what's in the scanner. And what's really cool is once you save that, or once you figure that out, once you set it up here, you can save, and then you can come back and use save scanners on there. You can also do it for stocks and ETFs. There was only one ETF today, XBI, and that's not on the list that I would normally trade, so I'm not going to trade that one. So of my criteria here, there's only 1, 2, 3, 4 that passed today. There were like 60 something on the bull list. 63, I think it was. Yeah, 63. But not every one of these is going to fit your trading style, right? Some of these have downtrend indicators. Some of these have neutral indicators. Some of them have green indicators, but they're less than a million average daily volume. But you know what? Find what works for you. This is just my style of trading. So I take those 4, I drop in the spreadsheet here, and there's not very many to choose from. Of course, I'm going to select only the bullish ones. And that's JHG, OMC, Oracle, and STWD. Take that, drop it into TrendSpider here. Now, the reason I do this is because there's additional data that I can get from TrendSpider, like, where's that at? Here. No order blocks in the way, no earnings in the next 3 days. The 10, 20, 50 is in the price of the trend that we want to see, right? Price moving in the direction we want to see. And it's above the prior day's low. So if I run this here, we've got 2. JHG, which is actually right in the middle of an order block, so we won't be using that. And then OMC. OMC, see any issues there? So let's go to the next one. So we start with the highest back test. Well, it's just OMC. OMC's back test was, let's go look, 0.71%. Still positive, but 0.71%. Let's check the heat map real quick, make sure it's not already stalled. So yesterday is G7, today is G8. All right, looking good. And then now we look on the option chain, 21 days to expiration or greater, 250 plus open interest, less than 50-cent bid-ask spread, less than 20% extrinsic value, generally puts us at 80 delta. So who is that again? OMC. No, there's no liquidity here, right? So I want to see at least 250 open interest, at least. And we've got barely even 50 on a couple strikes. Even if we go out to October, yeah, still nothing there. You can go out of the money, but that's not how I trade. So no new trades to put on today. This does happen, right? This happens frequently, right? Looking to make sure that you've reduced risk where you can, and looking for new opportunities. And there were none for me today. And that's okay. That's part of trading. I'll sign out of here. Let's take one last look at the market, because last time I saw it was down 87 basis points, down 88 basis points right now. It's a big, ugly candle. But you know what? All of our trades are still looking sharp. So that is how trading goes, right? Allow the trades to work for you. Don't rush into anything. And just making sure that you have a reason to get in as well as a reason to get out. So that's going to wrap it for today. No new trades, nothing to take off, just hanging out. Y'all have a fantastic afternoon. Thanks so much for coming. I will see you right back here tomorrow on the trading room, and we'll talk soon.